the easiest trading strategy ever. So I'm gonna show you the easiest. This is the easiest. I'm sure anyone or everyone can learn from this strategy, so you can start making money. So before I start, please don't forget to like and subscribe to my videos and hit the notification button. So let's start with how the market moves. So as you can see, the market moves in impulse and correction. So I just want to show you this before I show you the most two traded patterns, because I trade patterns. So this is an impulse, correction. Then we know that when it corrects, we don't enter because it doesn't give us much pips. Then impulse, it's a small impulse, correction, then a bigger impulse. As you can see, the market moves in waves. This is an impulse, correction, impulse, correction, impulse. So if here, for example, it has impulse, you know here you're gonna look for your sell entries because it is correcting. It's gaining more power to go to the downside. So I just want to show you these two most traded patterns before I get more before I get into more detail on this. So there are two most traded patterns, so I just want you guys to know them because we're gonna see them a lot here. So I just want you guys to know them. This is a continuation pattern. You know, when you see this pair that is still going to the upside, just want to show you guys so that shouldn't confuse you when I talk about these patterns. This is a continuation pattern. Just write it. So this is our continuation pattern. So this is our continuation pattern. Every time we see this pattern, that we know that the market is changing the direction, it's going to the upside. This is a correction phase, and this is the impulse phase. As you can see, let me show you another one. These are the most two traded patterns. They are extremely important, so I want you guys to know them so that when I show you the strategy, you shouldn't get confused. This is a reversal pattern. So reversal pattern, we know when we see this pair that it's changing direction now. It's changing the direction. In case you're wondering why I put this here, this is our 90% rule. This is what usually happens when there is a continuation pattern. When it breaks, it normally hits the 90% rule where it started, so we call it the 90% rule. Let me just get a text for you guys so you can remember this. This is our 90% rule. So you shouldn't forget this, guys. Every time when we have a pattern, when it breaks, it usually hits our target pattern, so we call it the 90% rule. So the other thing I want to show you guys that there are two entries that you can trade. The first one is the risk entry. Normally the risk entry it's normally here on our third touch, this is our third touch. Then you can enter risk entry. This is, sorry, let me edit this. Let me remove this, and because I didn't check the spelling right. This is our third touch. Or risk entry. So normally when you see this pattern, it normally does 3 touches. As you can see, this is our first touch, our second touch, and our third touch. So if you want to enter this trade, what I like about the third entry, third touch entry, is that it has the stop loss is minimum, or it's tight. You know, if it passes here, if it passes this, then you know it takes you out easily. Or there's another entry. This is the entry I like. You know how the market moves? Just extend this so you can see clearly. So this is the entry that I like the most. I know it breaks, then comes for a retest. When it comes for a retest, that's when I enter my trade. This is where I usually enter my trade. Then I know if I entered here, then it doesn't come for a retest, then it goes to a 90% rule. What I hate about this one is that this one here, what I hate about it is it breaks, you enter the trade here. For example, I just want to show you. You enter the trade here where I put the blue line. You enter the trade, then it goes up, then it comes back for a retest. When it comes back for a retest, it hits you up if you put it on break even, or it hits your stop loss. Then that's when it moves to the upside, to our 90% rule. So this is the one that I love the most, because I wait for it to break, shows the confirmation that it's still going to the upside, then wait for it to come and correct, then that's when we're going to the upside. The same thing here on the reversal pattern. Same thing. Same thing here on the reversal pattern. Just wanted to show you guys. Third touch, or you can get the risk entry. This is the same thing as the continuation pattern, and this we call it the reversal pattern. Sorry, we call it a reversal. Call it the reversal pattern. So these two patterns are the most traded patterns. You will get to see them when we go to the charts now. I just wanted to show you this. So even here, this is the risk entry. As you can see also here that this is our first, our second, our third touch. Then you can go in with your risk entry. You know, your stop loss will be tight, or wait for it to break. Then it will go for a retest. After going for a retest, then normally shoots down to a 90% through. So a lot of people ask me if it doesn't retest, normally you don't enter the trade. Yes, if it doesn't retest, I do not enter that trade, because when it doesn't retest, it moves heavily, so I'll be having a big stop loss. So if it does this, then I do not enter the trade. So I normally wait for it to break, come for a retest, I put my entries, then I go down with it. But if it breaks and it moves heavily to the downside, I won't get an entry to trade that pair. I'll wait for other pairs. There are too many pairs in the forex market, so even if that entry passes you down, you will get more entries. As you can see, this is the most traded patterns. They're extremely important. Please guys, remember these patterns: a continuation pattern and a reversal pattern, because we're gonna see them a lot just now. So let's go down to the chart so you can understand what I was talking about. So it's easy to enter the trade. I just want to start with this one, loss. If I put it like this, it doesn't make sense because the pattern broke, then it went up. So I need to evolve my pattern. As you can see, let me put it here on top so you can also see it. If you zooming it closely, you will see the first, second, third touch. Then that's when you can go for your entry on the risk entry. Just want to show you on the risk entry. Just want to show you. This is the risk entry, guys, don't forget that. This is the 1 hour time frame. See how your stop loss is, and our target obviously is going to be here at the end of the pattern. So our risk ratio will be 1:6. As you can see, the risk ratio will be 1:6. Will be a nice entry. So I just want to show you guys more. About the risk entry. As you can see, this is a continuation pattern. So the pattern that I really love is this one. See, the pattern breaks, then comes for a retest. That's when I normally enter my trades here. Then it impulse. But as you can see, this is a smaller structure. I'll show you a bigger structure, but as you can see, this is what I like. Impulse, then wait for it to come and correct, then that's when I go down with it. I'll just show you more. Just show you more of the entries that I'm telling you about, so you can get to learn them or get to know them. There are many structures here. Also, this one here is a reversal pattern to the downside. Sometimes it doesn't touch. As you can see, this is our second touch, and here it couldn't do a third touch. It rejected with a candlestick. So this is the trades I was telling you about. So you see here, it broke and went straight down. So normally trades like this, I do not enter them because there's no entry for me. Even if you go to the 15 minutes, there's no entry. So I normally leave them and check other patterns. So this is what I was telling you about, that sometimes the pattern, when it breaks, it doesn't come for a retest, it moves heavily to the downside. So this one did the same thing, broke and move heavily to the downside. So trades like this, I do not enter. I leave them alone. As you can see, there are too many. Too many reversal pattern. This will disturb. Let me put it like this, because I don't want it to disturb the previous pattern that we just had. As you can see, this is also a reversal pattern to the downside. The pair we're checking here is gold. It's gold. Here is our continuation pattern. This is our continuation pattern. So if you want to enter, you just wait for third entry. But here, as you can see here, also we do not have a third entry. The price rejected, so it couldn't come for our third entry. So what I normally do, if it rejects like this, I sometimes do enter a trade. But the one that I love the most, that works for me, is that when the pattern breaks, as you can see, it breaks, then comes for a retest. So when it comes for a retest, that's when I normally enter the trade. My stop loss is gonna be here. I sometimes have a big stop loss. It's gonna be here. Then my target, obviously it's gonna be here. So as you can see, the risk ratio is 1:18. You can see the risk ratio is 1:18, and obviously moves. And here, if I go to the 15 minutes time frame, it's another continuation pattern. I would enter it and hit my target here, but it won't be a lot of pips, but as you can see, still moving, still going to the upside. So this is the continuation pattern. So this is the entry I was showing you that I love the most, is that it breaks the continuation pattern, come for a retest, enter the trade, then I move with it. So this is another reversal pattern. As you can see, there are too many patterns here. Too many patterns. Too many patterns in the market. So if you miss one opportunity, there are other opportunities that you will also get. As you can see also here, it didn't do the third touch, price rejected. So meaning this is a strong zone. You can see the price rejected. So then it came, broke heavily, came for a retest. That's where I normally enter the trade. Then it hits our 90% through. So this is the easiest forex trading strategy. Also here we're seeing another reversal pattern. So if you see them and that you do not see them clearly, you go down to the smaller time frame. If you go down to the smaller time frame, that's when you'll get to see them properly. Impulse and the correction, it's a small correction. This one I normally do not enter, but if you go down to the smaller time frame, maybe the 15-minute time frame, you will see that it's a reversal pattern. Maybe you can enter the trade here, but I do not like this trade because I will have a big stop loss, and I don't like big stop losses. I prefer to have small stop losses. And here is another reversal pattern to the downside. As you can see, what I was telling you, these two are the most traded patterns: a reversal pattern and a continuation pattern. So as you can see, it broke, did a reversal pattern, but it didn't go much deeper, and here it rejected. So a trade like this, I'll normally leave it because it didn't give me an entry. So there are too many patterns here, as you can see. Reversal pattern, continuation pattern. Even this one's here, if I was on the smaller time frame, you are gonna see a reversal or continuation pattern. So as you can see, it has too many patterns. So there are too many opportunities in the market. So if the trade has left you, wait for another entry because you'll get it. This is another reversal pattern to the downside. Here it shows you that the momentum is going to the downside because it keeps on rejecting, and you can enter your your risk entry. This is a third touch, your risk entry. You can enter it here, then your target was gonna be here, but as you can see, it moved heavily to the downside. So for my entry, I wasn't gonna go in because it didn't come for a retest. I normally wait for a retest in order to enter the trade. Here's another one. Here's another continuation pattern to the upside. As you can see here, this one here didn't come for a retest, so it was gonna leave me, or I was gonna enter it here when it shows this is a strong zone. I was gonna enter it here, then I'll go up with it. Obviously my target was gonna be here. So as you can see, most of these patterns, they hit our 90% target. Also here is another reversal pattern to the downside. So you choose that you enter a risk entry or a normal entry. So even here, I was gonna wait for it to break, went down, came for a retest, I would enter the trade, then I would go down with it, then I will see that it's creating another reversal pattern. Then I'll know that we're still going to the upside, but I'll move my stop loss to break even. So if it corrects it, if it does a bigger correction, if it takes me out, I'll wait for another entry. Wait for another entry, as you can see. As I wait for another entry, I also check the zones. If this is a strong zone, I know that when it starts to reject here, then I will enter my trade here, then it will hit our 90% rule. So as you can see, there are many opportunities in the forex market. If one opportunity left you, there are other opportunities. Something that there's only one opportunity, there are too many. As you can see, this is another continuation pattern to the upside. But as you saw, gold has many reversal pattern. Here. You can see bigger structure. As you can see, there are many structures, but they are the most two patterns that you'll ever find. If I go to the 15 minutes time frame, we will also get patterns here, but I just wanted to show you the most two entries that will make you a lot of money in the forex market. It's the risk entry and the retest entry. So those are the entries that I love the most. So let me just go down to the 4 hour. Go down to the 4 hour, so you guys can see how many patterns. You see there are a lot of patterns here. Impulse, smaller correction, impulse, then impulse, smaller correction, impulse, correction, impulse, correction, impulse, bigger correction, impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse, then impulse, then correction, then impulse, then correction. As you can see, the market it's changing the directions now. As you can see here, this is an impulse, then it's changing the direction now again, then impulse, correction, impulse, correction, impulse, then it's correcting here. Thinking there will also be an impulse, because as you can see, let me show you the biggest structure here. So there are patterns inside patterns. That's what you should know, guys. Patterns inside patterns. This is the confirmation that I really love when I saw in patterns, and also patterns inside a pattern. So as you can see, this is a reversal pattern, biggest structure, and then you can still do your entries and still go up with it, entering the trade, making profits. Then on the third touch, that's when you get to sell. You know that the biggest structure is going to the downside. So thank you guys for watching my video. Please don't forget to share this video to other traders so they can also make money. And don't forget to subscribe to my YouTube channel. Thank you very much, guys. Enjoy your day.